I've got to take stock of this sell-off here in the pre-market, Jim. General take this morning is that the market's now catching up to what we know has been a problem in Europe, and these lockdown restrictions in the UK and France are getting more serious. Dollar strengthening, some believe, because the situation here is at least better than Europe on a relative basis.
Well, I think we're importing their negativity. I don't think that it's necessarily going to last, but you certainly can't make any moves to the positive until about 11 o'clock. When you start seeing their markets peter out. Now, it's one thing. It's very frightening when you read what's going on there because it's so obvious that it's a second wave, and it seems more viral. I don't know whether that's just whether that's true or not, but the number of cases are certainly daunting. But I want to warn people that if you follow what they're doing and you sell our stocks because of what's happening right now in France, that's going to prove to be something that you might regret. I was negative going into the bank period because they never, ever do what people want. They always seem to disappoint. And David, it's gotten to the point now where even the good ones, we're Morgan Stanley, we're Goldman Sachs, which beat by, 80%, ignored. And now today we're working about the Madrid COVID and Paris COVID. Doesn't make sense to me. David, I'm at odds with it.
You're at odds with the fact that what? I'm sorry, that the market should be responding differently to the rising cases or in Europe?
Yes. I mean, we are not Europe.
Right.
Now,
but we're still running 55,000 a day. At least that was the number yesterday. I haven't looked at what that was 2 days ago, yesterday's number. I haven't looked at today's, Jim, but we're not exactly
no,
doing
but
well.
It's, I mean, unfortunately, it's terribly consistent. It's not, and people will talk to you about death rate. Very interesting articles these days as we start talking about COVID long, that there's something else besides the death rate that we should worry about. But what I'm saying is that if you look at the fundamentals, look at that Goldman quarter, study Morgan Stanley.
Strong quarter, Morgan Stanley, which we'll get to also. 15% return on tangible common equity. Say again?
Wells Fargo and Citi were not good.
No, J.P. Morgan was fine. But
fine.
To your point, all the banks go down.
Yeah, it doesn't matter. I mean, Goldman Sachs, you speak to Steve Scher. I mean, he's
CFO.
the CFO. It's a rather remarkable quarter. And I think what people call, one of the things that people have to recognize is the amount of business that is being done with Zoom is incredible. No face-to-face, just Zoom to Zoom. And it's working. It's not supposed to. But the expense structure is, for a lot of places, is better simply because people don't go anywhere.
Shepard Smith here. Thanks for watching CNBC on YouTube.